come out with the IT major HCLTech's Q1 numbers. Let's look at the numbers first. Then I do see a beat coming in on the net profit, whereas revenue and the margins seem to be in line, falling in line with what ET Now poll was expecting. Now let's look at the numbers, and this is on consolidated quarter-on-quarter basis. The revenue has come in at 2,800 crore rupees versus I beg your pardon, 28,000 crores versus 28,499 crores, which is down 1.6% on a quarter-on-quarter basis. But that is something that we were penciling in, so that is in line with what we were expecting. However, if you look at the PAT, we're seeing a beat coming in on PAT on a quarter-on-quarter basis. But tell you what, IT analyst Anisha Jain is joining us with the number crunching. Let's go cross and patch her in on the phone line. Over to you, Anisha.
Hi, thank you so much for that. I'm just taking a look at the first numbers that I have. The profit looks like a beat, but that is because of the one-off that I see, because the other income has shot up quite materially. There's a 1,100 crore other income this time around versus 400 crore that was their last quarter. So there is a bit of a, one-time element as far as the bottom line is concerned. Having said that, the constant currency revenue is down 1.6% quarter-on-quarter. We were penciling in a decline of 2%. So on the top line, the performance has been better as well. The U.S. revenue has come in at $3,360 million. That compares with my expectation of $3,358. So a smidge better, if I can call it that, versus my expectation. Revenue overall, 28050 was my expectation. The actual number has come in at 28057. The revenue largely in line with expectation to slightly better. Margin has held up at around 17%. Again, we are working with a number of 16.9. So in line with expectation there. And the profitability is looking better, but it seems like that is on account of the one-off income which I'm seeing. Now, in other details, the TCV of the new bookings is coming at $1.96 billion. Slightly lower, but not anything to get worried about, I would say, at the moment. But definitely something that we'll have to track, because for TCS as well, the deal win momentum was a bit lower. The company has maintained their guidance when it comes to the FY25 revenue. So the revenue guidance continues to be around 3 to 5% growth, which was the earlier guidance as well. And the margin too has been maintained at 18 to 19%. This was something that the street was largely penciling in, that the guidance will be maintained. That has been held as well. I'm also taking a quick look at the attrition figure. That's come down to 12.8%, and they've added almost 1,080 freshers as well. While overall, if you look at the net additions figure, it continues to be negative. So if I had to give you a summary of how the numbers look, well, they are in line with expectation. Nothing that looks like a big worry to me at this point of time. Yes, the headcount is a bit lower. Plus, deal win is something which is coming at the lower end, because Street was penciling in a number of 2 to 2.3 billion. So they have missed the estimates when it comes to deal wins. But TCS had also said that there has been delay in some decision making. That is what is impacting the number. And additions or headcount continues to be weak. Guidance has been maintained in line. Margin was okay. And overall top line is also okay. So my guess is it should go down well with the street. But the fact that the IT stocks had run up today, HCL was up 3.5%, leaves little room as far as the upside is concerned come Monday morning. But overall looks like a decent set. If we do have the guests joining us, maybe we can talk to them about overall what their expectation was and how the number fared. But C. Vijay Kumar says that we are confident of decent growth in the coming quarters, positioning us well to deliver our revenue guidance for the year as clients continue to spend on Gen AI and other emerging technologies. So Gen AI is definitely finding mention as one of the growth drivers. And they also talk about decent growth in the coming quarters. And similarly, Prateek has also said, Prateek Agrawal, the CFO, has also said that they remain committed to improving our capital efficiency. Sandeep Agrawal also joins us on the phone line. Sandeep, hi, good to be speaking with you. Your first sense on the numbers, especially when you look at the TCV and the headcount, which we usually take as the lead indicators of growth, they are slightly weaker, but at least execution has picked up.
So good evening and thanks for having me on the show. So what I will say is that, this number should be seen from three perspectives. First of all, on the revenue front, in the current revenue, if you see, there is a 40-50 bips beat versus expectation similar to what we saw in TCS. So I think on the revenue front, there is a positive beat and also the guidance has been maintained. Remember, this is only one quarter and 50 bips beat cannot allow you to upgrade the guidance. And HCLTech in the past has 1 or 2 years of bad experience when they have to cut guidance. So I'm very sure they will never upgrade the guidance so quickly. But a beat in the current number definitely means that the revenue growth at least is on the right path and there is no risk on that. Now coming to the second part, which is margin. Again, if you see margin, there is a slight beat, maybe only 10 bps, same like TCS, slight beat. But again, the decline has been arrested. Number 3 part, which is the headcount and the order book. So I would only say this, that this is a B2B business. So it is a B2B business. So, the TCV should not be seen for only 1 quarter on a standalone basis. Some orders may be in the final stage of getting converted, pipeline and all that. So I think more important than that is the commentary of the CEO in such cases, and the commentary is very positive. Coming to the fourth part, net headcount addition, see, the attrition and the recruitment moves separately. So always the HR tries to manage it well, but there could be some gaps. So I would not read too much into it. In my view, I have said earlier also, this is a beginning of upgrade cycle, and we see a lot of upgrades coming for next 2 to 3 quarters. And these upgrades will be more margin-led and not revenue-led, because revenue growth may not be very high this year, but margin, there is going to be big surprise every quarter because the attrition has fallen to historical low levels.
All right, Sandeep, thank you so much for joining us. We will have to let you go on that note. We're completely out of time on this edition of News Now. Thank you.
If you like this video, then like, share and subscribe to ET Now.